How's it going, everybody? It has been a minute since I've made a video, and I think right now would be a very good time to make an update because significant things have happened on the markets, particularly the stock market, in, I guess, a reaction to the tariffs imposed by Trump and obviously the reciprocal tariffs imposed by China. Whatever the narrative is, the stock market at the moment is taking a beating. However, something that we do notice at the moment is that the Bitcoin and cryptocurrency market has stayed resilient during this time. And I think something worth pointing out is a lot of the risk assets, in particular crypto, have sold off first before we actually have seen this stock market capitulation, essentially. And I guess the question is what is occurring? Is it bullish or is it bearish? And there requires a deeper thinking when it comes to the tariffs and I guess the intent of the tariffs. And when it comes to Donald Trump, a lot of his wealth has been built on debt and real estate and refinancing. So in order to, I guess, make the American economy better again, or make America better again, the core principle here is to lower interest rates, right? And tariffs as a mechanism actually slows down economies. And in this particular example, the global economy and the US economy as well. And in doing so, it stimulates industry within the American economy, as well as the short-term pain that occurs pushes the Fed into lowering interest rates, right? And consequently, making the American people better off, richer in terms of industry, as well as being able to borrow and make their industries better as well. With that also being said, there have been, large investments by, the Saudi Arabians, the bigger Asian manufacturers such as Hyundai, like in the sums of billions and like tens, hundreds of billions of dollars stimulated into the American economy currently due to these tariffs. And obviously some countries are dropping off tariffs so they don't get the reciprocal amount by the Americans. But with that being said, the core principle to understand here is the intent behind this. Obviously, one, to make America great again, and two, the lowering of interest rates is what's going to inject more liquidity and risk appetite into the markets. And something that we're seeing at the moment is actually the global liquidity has been rising. And I know that if you've been in crypto, this is a line that everybody has seen, the yellow line, the global liquidity, and how there is a lag between the actual movement of the global liquidity and around 75 days before the actual reaction from Bitcoin following said liquidity. Why that is because the mechanisms of money, when it is transferred from hand to hand and onto the market, it takes a little bit of time to reach cryptocurrencies. So, what does that tell us? And is this bullish or is it bearish? I do believe that short term it could be, well, it's already not great for the stock market. But in saying that, from a structural perspective at the moment, I do believe, and something that we should really take note of, is the decoupling between equities and cryptocurrency. The actual Bitcoin price did not react to this substantial stock market knee jerk to the Friday open, right? And we've gapped down twice now, 2 days in a row. Can't remember the exact figure on circuit breakers that halt trading, but that drop is quite significant, and the fact that cryptocurrencies have actually structurally found bottoms, in my opinion. And I'll actually go over my setup here for Tau. I'm still in this trade, believe it or not. I've reopened at the lows. I had it opening at 200, and I'll explain that in a little bit. But let's have a look at Bitcoin at the moment and what levels we should be looking at. I might actually delete some of these. And something worth noting is like this long-term channel. I know people have drawn this in different ways. I do believe my way is the best way because there are so many touch points, especially in the middle. 2 touch points on top, 2 touch points on the bottom, multiple touch points in the middle, and I think that's the best way to draw it. That just validates the channel altogether, and obviously rejection off the bottom side of that channel or resistance created by the line of these 2 lows here. So this structural breakdown, obviously not the best thing. There's another indicator as well, the moving average, the 50 moving average, which I can go over later, but not as important as, I guess what people are interested in is the immediate price action, right? And I can actually use some examples from the past on what is occurring here, but obviously the premise of this channel is fibs, and I can explain right now whereby I do believe that there is strength within this trend, despite things looking a little bit fucked up, and it looks like we're about to go down, right? And I've seen moves like this before, and the fact that we have touched the non-log 1618 and have showed demand on the daily, generally what you'll see by these retraces are deep pushes into this golden pocket. I'll draw it out for you like so, right? Pushes in and then wicks up from the 0.65, even lower than that, closer to the 0.786, right? And the fact that we've actually just brushed it by a few ticks, and the bodies are actually far away, meaning there's demand in this area. People are buying between these bodies in decent amounts. You would like to see, or you would have liked to see, the liquidity grab occur already. And what I mean by this is I actually have a chart not saved here. I sent it previously, but when the price was over here, I was saying that it would probably go to this area, right? This RZ area, and then reject. And if there is a large impulse, you would go all the way down, possibly to the 0.786, taking out any of this liquidity, right, and pushing up, and also the GP buyers as well. And I've seen similar trends to this in the past, right? But at the moment, as the time continues to tick on, the fact that we've shown demand above the GP, as well as longer time in the range above the, above here, bullish, below here, bearish, right? The longer we spend above this, the more I'm inclined to think that we have another test of this large resistance, this diagonal resistance, from which we break up, right? And here is an example similar to this in terms of structure, and I will put that side by side. Where is it? Here it is, right? So structurally, we get a push up, right? I know this is much higher than the GP, but indulge me for a second. Indulge me. Right. You see what I mean by this? Actually, it is exactly similar, in a sense, where you go down to the GP, right? In this circumstance, it pushes into the GP, holds above 0.786, pushes to the orange box, right? And then comes back down to test 0.0786. And I've seen that happen a lot of times in this market, where the GP isn't particularly the level that holds and sends up in a very bullish circumstance where it doesn't allow buyers to buy any lower. It will push up continuously from that point, similar to, let's say here for an example, where it will only test once and then it will push up. But in this circumstance, it will take out the liquidity bought by GP buyers and push back up. And that's what I was sort of expecting here, considering the weakness of the stock market. And the fact that the stock market has dropped down, 15%, and we've held around this level, the automatic reaction that I have here, the instinct, is that obviously something like this on the stocks is not completely sustainable to the downside, and I do not believe that we're in a bear market just yet. I do think that the reaction from a drop like this will result in a bounce of some sort, right? And once that bounce does occur, that's when the Bitcoin move occurs as well. So if we're not moving to the downside during the stock market downside, the other side of this coin is when the stock market starts to pump. And obviously Bitcoin might struggle to get the liquidity to pump when people are risk off / are panicking on their other assets, right? But when things start to bounce, people will start to have an appetite for risk once more and start pushing Bitcoin, and they'll go to the strongest sort of asset that they see, or in this circumstance, store of value, which is Bitcoin, digital gold, right? All right, I guess that is sort of my immediate Bitcoin analysis. And in terms of the price targets, and that's another interesting thing. And yeah, this is going to be a bit of a longer video, but I guess it's worthwhile going through these things to kind of get our minds across the potential of this market. And I actually saw something very interesting in terms of the level that this fib makes, this trend-based fib creates, and my system has been created around trend-based fibs, right? In terms of price targets, especially on Bitcoin, the edge exists on Bitcoin still to this day, and I'll show you an example. So at the start of every market or cycle, I will draw this Fibonacci from here. I'll even tighten it up a little bit like that, right? So low and the ball that gets thrown up and bounces, and we're looking at a 150,000 to 180,000 level, right? And I'll just draw this box here just so we're not confused and we understand that that is the main fib box and target box that we have for this particular cycle, and this can be back tested on every single Bitcoin cycle, right? And this has actually existed for these current moves as well, right? This has created a 46236 box and 4618 box and has given us that level, and also we can see it here as well. Ball thrown up, bounces, gives us the 4236 level, and that's a really decent time to de-risk, and it also gives us confluence with a very similar method that I've shown in previous videos on the USDT chart, which I'll go over after as well. But in saying that, the fact that the last two examples kind of give us the 4236 level, right? That exists there. And the 4236 level exists within the major fib box drawn from the start of the market. I would say a good point to start to think about selling is $152,000, or just a little bit above, or just a little bit below. You could even short that level, I think. And a common trend that we're seeing throughout this entire market is after every single compression phase is a rise, and you probably saw on another chart I drew, and I'll just roughly estimate this, a rise of 90%, right? Hopefully my headphones don't die on me. So every compression phase has a rise of 90%, right? and it has happened multiple times over from the lows that it creates. And what do you know? The lows from here end up right at $150,000. So I do think that if you are holding on still and we do get that expansive move up to $150,000, that is the level to be watching and selling from, right? And it's close enough to the top of the cycle. What you'll definitely hear, and maybe it does overextend there when we get pretty euphoric and goes upwards to the $180,000 level, but you'll hear Bitcoin's the new paradigm, this, that, and that's when the things will get a little bit overheated and people will have crazy narratives on why this market will go to $200,000 and even $1 million if you are aware of, just the mania that can occur during these bull cycles. But anyways, besides the point, as you guys can see, at the moment I'm still in BitTensor, and obviously the reads on cryptocurrencies in the altcoin sector have been quite difficult to stomach, especially with the heavy downsides that we have been experiencing. And it was hard to predict that, we could expect that there was going to be volatility, but to this extent it has been pretty brutal. However, I do think that there's still opportunity for altcoins to at least make the final run in Bitcoin's last leg, as they do throughout the history of cryptos, right? And let me take your eyes to the previous cycle, and there are very similar, excuse my fibs, there are very similar structures that presented themselves around this point in the cycle. Let me show you here. With NIA, the example that I'm showing occurred right before the last leg of Bitcoin, which can be found here, right? And that's the final leg that ended off the cycle. And it actually kept on going a little bit as Bitcoin consolidated and dumped into the bear market, right? But I would want to sell, around the top, which I think, as I explained, is 150, and let go of the remaining 50% at the tops that are going to be maybe occurring. You don't know for sure, right? But if you know that the $150,000 region has a high probability of being the top, and there's diminishing returns afterwards, risk is too high, good time to start exiting the market, right? And now, if we're in the last leg, and this was the last leg of the market previously, and we go to Tau now in comparison to how NIA looks, I see a lot of similarities in a few things, in terms of timings as well as magnitude of the move, right? So let me measure Tau's move down all the way to the bottom, right? I know NIA is a little bit more, 78%. Tau's drop is 73%. The extent or the duration of this correction from its high was 120 days. For NIA, it was 126 days from its high, right? There are fucking heavy similarities here between these two shapes, and not only that, the triple bottom that's created on diminishing volume, meaning each attempt at ripping the price downwards resulted in less volume / less sellers, right? And that's a similar behavior that we've seen here. We see a deviation outside of the top of the trend, similar to what you see in BitTensor here, and this marked the bottom for NIA before its major rally, and that's why I've re-entered BitTensor at these particular lows, because that is the result should the Bitcoin market or the altcoin market move up together, right? Very clean setup, and should this occur, right, and we were to overlay, I know this is a meme, and in terms of Will it move the exact amount as near? No, it might move more, might move less, but in terms of duration and how long this might be expected to play out in terms of the first move, if we were to measure from here to here, right? That absolute high here would be around that $1,000-ish level. I do think that that's a little bit low for BitTensor, but you can see the timing of this move, and we need to see it happen soon in terms of the aggressive nature of it. Has sort of like that 90-day period to play out. Generally, for example, the initial impulse of these altcoins happens in the first 50 days. And I have so many examples of this, but I'll just go to this example here for BitTensor. This major rally occurred over 50 days, 700%, and the next one also around 50 to 60 days. So 50 to 60 days from now would put us around the end of May. But that is given the fact that the market moves soon. And yeah, that's sort of all I have for today before I take up too much of everybody's time. Hopefully that gives some people some perspective at the moment on what I'm thinking. In terms of the bearish scenario, if we see Bitcoin somehow take out $76,000, goes down here, very possible still in one like massive candle, then I would change my stance on this cycle, and there are signals that perhaps this could be over, right? The altcoins, a lot of them do look like they could be in a bear market, and a move down below that $76,000 level would start to confirm that for me, and I'll have to switch my stance on how I am positioned here in crypto. But anyways, hopefully that's helpful, guys. That's it from me. Peace.